We are in print. Our base case is 650,000, but that base case was set before the SEC approved the Bitcoin ETFs. And so we are more convinced now that our bull case of 1.5 million by 2030 is the more likely case. The corrections used to be 95%. Now they're more like 75%. That's a lot. So I don't want anyone to think that it's straight up and to the right, because the corrections are pretty violent. They're getting less so, and I think as Bitcoin moves more into mainstream investing, the volatility will go down dramatically. So it's not like we're saying it won't go down. It will.
Cathie Wood starts by highlighting ARK Invest's base case scenario for Bitcoin, which projects a price of $650,000. However, she quickly notes that this estimate was made before the SEC approved Bitcoin ETF. With this regulatory milestone achieved, she is now more confident in ARK's bull case prediction of $1.5 million per Bitcoin by 2030. This optimism is fueled by the convergence of technology, the evolution of the global monetary system, and the emergence of Bitcoin as a new asset class. Bitcoin matures and becomes more integrated into mainstream finance. Wood expects this volatility to decrease significantly. She cautions investors not to expect a straightforward path to massive gains, as corrections will continue to be a part of Bitcoin's journey, exacerbated by weak holders who enter and exit the market based on short-term price movements. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We are in print. Our base case is 650,000, but that base case was set before the SEC approved the Bitcoin ETFs. And so we are more convinced now that our bull case of 1.5 million by 2030 is the more likely case. So we've got technology, global monetary system, and a new asset class, which is why we are really excited. And, you know, the ARK 21 shares Bitcoin ETF is a good example. We have enjoyed tremendous inflows, and I'd like to think it is because we wrote our first piece on Bitcoin in 2014. We've earned our stripes. We had our first white paper with Art Laffer, Could Bitcoin Serve the Three Roles of Money? That was 2015. And then we wrote our second white paper, Bitcoin, Ringing the Bell for a New Asset Class. That was 2016. And finally, the SEC approved earlier this year a Bitcoin or many Bitcoin ETFs. So we think institutions have not moved very aggressively thus far into Bitcoin. Why? It's because they need to do their due diligence. They need to, we've spent 10 years doing this, so we're very comfortable. You know, if you look at BlackRock, for example, until I'm going to say 3 years ago, BlackRock was pointing to the negatives associated with Bitcoin. And then, of course, there was the conversion. And fantastic. I think BlackRock has done a lot for this movement of Bitcoin into a new asset class. But we've barely begun on that. There's no way to shut Bitcoin down. And China tried. And all the activity that was in China just migrated. There's no oversight. There's no throat to choke. And it has proliferated to such an extent and is serving a really important role, especially in emerging markets, where people, of various countries, if their leaders either don't understand economics or there's corruption, and they lose purchasing power and wealth, to the tune of 50% in a very short period of time. Even this year, Egypt, I think it was the beginning of March, devalued the Egyptian pound by 40%. And so having an insurance policy like Bitcoin is really important in emerging markets.
So the bear case for Bitcoin isn't even that it could just go nowhere, but that it will 20x in 5 years.
I mean, you've seen the corrections are violent because it is so early and so young. The corrections used to be 95%. Now they're more like 75%. That's a lot. So I don't want anyone to think that it's straight up and to the right, because the corrections are pretty violent. They're getting less so. And I think as Bitcoin moves more into mainstream investing, the volatility will go down dramatically. So it's not like we're saying it won't go down. It will. It's a new asset class. And there are a lot of, I would say, weak holders. They get in because of FOMO, so fear of missing out, and then they lose 20%, and then they get out. They cut their losses. So that exacerbates moves down. So I think partly it's technology, that there's discomfort. Warren Buffett famously has said, if I don't understand it, and I don't understand most technology, I'm not going to invest in it. Now, he did invest in IBM, kind of at the wrong time, so that proved, to reinforce what he was saying. However, he didn't give up. He did invest in Apple, and that's been, a grand slam for him. So, but very little interest in technology, and a lot of people pay attention to him, especially more value-oriented investors. Where, in technology, you've got very often you have to invest aggressively. A company has to invest aggressively in the short term, forgo short-term profitability in order to be able to scale longer term in this new technology. Value stocks tend to be, what you see is what you get immediately. So there's a little bit more faith in the future, I would say, when it comes to tech investing. And, maybe, I'm certainly over 50 and, I'm all about technology. So a bit of maybe an exception there. But I do think there's just a general discomfort, especially because they lived through the tech and telecom bubble and bust. And they weren't looking at it with the perspective I just shared with you, which is, okay, these seeds were planted back then. They weren't ready. And so if you weren't doing the kind of research we're doing in terms of trying to figure out when technologies are ready for prime time, then they were going to get hurt. And a lot of people did get hurt back then. And so that's a memory. Losing money is painful. It's I know there are studies. You probably know the studies where it's much more painful to lose money than it is enjoyable to make.
Another critical aspect of Bitcoin that Wood discusses is its security. Bitcoin is backed by the largest computer network in the world, making it the safest cryptocurrency. The base layer of Bitcoin has never been hacked, a claim few other crypto assets can make. This security is maintained by a decentralized network of participants, all of whom have a vested interest in protecting the integrity of the ecosystem. Wood does, however, acknowledge a potential threat: quantum computing. While current encryption methods are secure, the advent of quantum computing could pose a risk to Bitcoin's security. Wood is encouraged that developers are already considering quantum proofing solutions, demonstrating the proactive approach of the Bitcoin community in addressing potential challenges.
Bitcoin is backed by the largest computer network in the world, and therefore it is the safest cryptocurrency or crypto asset out there. It has not been hacked. The base layer has not been hacked. I don't think any other crypto asset can say that. So, this is like a giant neighborhood watch. You've got a lot of people whose livelihoods have been built on Bitcoin, starting with the miners in the Bitcoin ecosystem, and they are all watching to make sure that this ecosystem is as robust and hack-proof as possible. Well, there is one thing that the Bitcoin community is watching, and that is quantum computing. But as I always say, when it comes to risks, half of the solution is understanding the problem. And so now developers are thinking in terms of quantum proofing. So I think that is something we should consider seriously. And I am happy that the developers are considering it seriously because, again, half the solution.
Do you think there are any other drawbacks to Bitcoin?
Well, many people would call drawbacks like higher cost than other solutions, slower transaction settlement times. But to us, those are features, not flaws, because it's part of why it is the safest ecosystem in the crypto asset world. So we don't look at those as issues. We look at them as really they've been built into the ecosystem to assure its success as the safest crypto asset ecosystem. What has happened, the U.S. has been the worst. Gary Gensler, as I've said many times, has been a menace to our ecosystem and has pushed a lot of innovation associated with Bitcoin and other crypto assets into the rest of the world. So much so that many of the innovators who have moved to other parts of the world, whether it's Switzerland or Berlin or London or Hong Kong, Singapore, they will not deal with U.S. investors even. That's how bad it got.
Why?
Because they think they'll be tainted because we are regulated by U.S. regulators.
And why are U.S. regulators so strict? Like more than any other part?
When you're a regulator, there's a lot of power seeking, and we know the history of the SEC and the CFTC. They've butted heads over the years, right? And we saw this during the derivatives, the evolution of derivatives in the 90s, and finally, with I think a Supreme Court ruling, they both regulate it, but regulate different parts of it. That is what I think was going on. There's a power struggle in the regulatory ecosystem. This is my purview. And so we may go to the Supreme Court again. I don't know. I think that was the main issue.
Yeah.
Wood criticizes the approach of us regulators, particularly SEC Chair Gary Gensler, whom she describes as a menace to the crypto ecosystem. She argues that stringent regulations have driven innovation away from the US to other crypto-friendly jurisdictions like Switzerland, Singapore, and Hong Kong. The regulatory environment in the US has become so restrictive that some innovators refuse to engage with us investors, fearing regulatory backlash. Wood attributes this to a power struggle within the US regulatory system, where different agencies vie for control over the emerging crypto asset class. This tug-of-war may eventually lead to more definitive legal rulings, possibly from the Supreme Court. Please like and subscribe my channel.